The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the May 12th terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes. Hope that you're off to a great start of your day. Let's make sure that we have an extraordinary Tuesday. Of course, let's always remember what's talked about is a dream. What's envisioned, well, it's darn right exciting. Of course, what's planned becomes possible. What's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence, and I'm here to serve you. So feel free, if you'd like, to dial on in at 877-927-6648. Of course, internationally, you can pick up that phone as well. Dial in at 727-445-1044. Remember, if you've got a question, many others have got that exact same question. So how about a random act of kindness? That's the way to kickstart your day. So call in on behalf of everyone else out there on this terrific Tuesday. Is it Turnaround Tuesday? Probably not. But it is terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now we got the Dow up 117 points, trading at 987. S&P is down 14, trading at 2090. The Composite's off 45 points. That's the weak link out here. She's trading at 49.48. The Russell's off 15 points at 12.20. DAX is off a little over 200 points this morning. The FTSE's down 100 points. Gold's up 6. Silver's up about 12 pennies. U.S. dollar index back 615 ticks. We've got some movement in the euro, some movement in the pound. We'll go take a look at those currency pairs out there. Movement in the markets for sure. To the upside, you've got AOL and PAL. Those are a couple of merger acquisition deals. But you got Intercept Pharmaceuticals up $6. Edwards Life Science up 5. Tesla up 5. Humana up 4. To the downside, Priceline is off $12, just in a trading range. New Link Genetics Corp down 22% out here. That's off $11. WageWorks down 17%, off $8. Rackspace down 13%, off $6. Let's begin the show. Let's go take first out. What I want to do is go back to, we're going to take a look at 2 30-minute charts, and we'll go take a look at the ETF structures out there during hour 1. We continue to look at the 30-minute chart here for the NASDAQ. A 30-minute chart here for the NASDAQ. We were looking at this morning's lows out here. We had a nice little bullish engulfing and hammer candle. We saw it close just slightly below that level as we came into that 10 a.m. close out there. You get a close below a hammer candle. It typically means if you're long, you're wrong. However, what we do have going on right here inside the NASDAQ, it was stretching to the downside and doing it with less relative weakness out there. That says it's something for us to pay attention to. Will be difficult. Doesn't mean it can't do it in this 30-minute session here that takes us to 10:30 to get a bullish reversal signal, but still price was moving lower in the weak link out here on a 30-minute basis with less relative weakness out there. That always says you got to keep one eye on it. The other 30-minute chart, we're going to go take a look at the competing chart out here, trying to hold things up. Well, it happens to be the ES Mini. So the ES Mini is stronger than the NASDAQ. We can say that because it too formed that same bullish engulfing and hammer candle down here at 8 a.m. And guess what? Those levels have held. So you've got the fight going on between the S&P and the NASDAQ out here, with the NASDAQ being the weaker of the two as we speak right now. Now let's go switch over and take a look at what's going on inside the ETF structures. Let's go take a look at the QQQ ETF series. Down $1.05, 7.9 million shares. Yesterday was majorly light volume, 19 million shares if I recall correctly. What do we know about the Qs? We know that the Qs have been trading inside its TAS market profile box out here. We ought to suspect that that's what it's going to continue to do. That says a range between 106.11. Quite frankly, the range has been primarily between 106.11 and 110.04. Should we expect anything different? Nah, I don't really think so. If we take a look at the swing points that we're dealing with out here, they haven't even been touched. That's a swing point from March 26th. So even on this drive, kind of lower out here in the marketplace, it has not even been able to get down into the swing point from March 26th out there. 47 million shares. We've seen a price move with 42 million shares back on May 6th. So far today's volume, 8 million shares. But of course, you and I, let's just do this. Let's go put this on a 30-minute chart out here. Let's see how the first 30 minutes of trading volume was this morning compared to to some other pushes to the downside out here. So this morning's first 30 minutes of trading, we saw a volume of 5.3 million shares. Well, let's just go look at yesterday. So we got that was this morning. That was 512. But I have the I've got the intra-session charts out here. That's okay. Let's take a look at the first 30 minutes of yesterday just to kind of take a look at volume. What is today is the 12th. Where's the 11th out here? There's the 11th. Get me to 9:30. 9:30 on the yesterday, the 11th. 9 was it? No, 9. Yeah, 9 o'clock. I'm sorry. Give me a moment here. I'm going to get 130,000. Well, so you got pretty good volume. No, I take that back. We had 3.5 million shares, 3.5 million shares yesterday. Today, 5.3. So we have a bit more volume than yesterday, but nothing that is really astronomical, so to speak. In fact, volume has fallen off quite a bit here just in this last 15-minute session out here. And that's looking at the Qs. So if we look at the Qs, again, good support at the 106.11 area to 110 is good resistance out here. Unless we see it close below 106.11, just expect this this unfun. Is that even a word? I don't think so. But just expect this trading range to continue. We see cracks below that, whole different setup. If we take a look at the Russell 2000, the IWM, Russell 2000 trade now to 121.11. Volume this morning of about 11 million shares. Now, the Russell 2000 has tested this swing point. This is from March the 10th. That had volume there of only 32 million shares. We've seen that tested time and time again with the volume, 72 million shares on April 30th, 56 million on May 5th, and then 34 million on May the 6th. But on the trading session of May 7th, it was with 29 million. We have a rejection of that swing point with light volume. We've never seen a test of the low of that swing point, which, by the way, is priced out at 119.83. We're pulling back in to test that level out here. Volume again today, about 11 million shares, should be able to exceed that 32 million share a day. But, anything can happen in the next, 5 hours and a half, 45 minutes or so worth of trading out here. Until we see it close below 119.83, we just know that it can't bust it down. That's the weaker of all the four ETF structures out there. The SPY's down to $1.70, 32 million shares. That's pretty good volume as it's moving to the downside out here. The SPY's basically have been traveling just like the Qs with inside its market profile. Really, the market profile here as of the we'll really call it as of April the 8th. We're now, May the 11th, so over a solid month. That market profile low, 207.62, is held as support. We're trading right now at the point of control level. That's where both bulls and bears are most comfortable with price. That's in the 208.98-ish area. So at this stage here, nothing really has fallen apart inside of the SPYs. Just expect some of the same rectangular trading out here. That's what's going on with it. We go look at the Dow Diamonds. The Diamonds are down today, $1.34, 1.2 million shares out here. Yesterday, the diamonds were pushing into the swing point from the trading day of March 2nd. They were pushing into it with volume. That had 3.2 million shares. Yesterday's push was with 3.7 million shares out there. That says that at some point in time, the Dow Diamonds want to get back up and test that level. We have not seen a rejection of that swing point with light volume. All we have seen is a push into that swing point with volume. We saw that on Friday. We saw that again yesterday. Right now, the TAS market profile box 178.61 seems to be decent support, but it really isn't. I can't consider that to be so much the support level as really just the top of the March 26th level, which is at 177.30. So the better messages, I suppose, really coming between the IWM, the SPYs, and the Qs out here. The SPYs are in the trading range, the Qs in the trading range. The IWM has tested the March 10th swing point with volume. And then with light volume, finally, last week and says it can't bust them down. So that's what's going on there. If we take a look at maybe the longer-term picture, when I say the longer-term picture, we go take a look at the indices, and we take a look at the week link out here, the NASDAQ composite. What we're doing right now, since the market's been traveling somewhat sideways-ish, right, sideways to slightly higher, what we've got is the NASDAQ composite. So if we take a look at the week link out here, we can see that price this morning has moved down into its horizontal daily trading range. This is the daily chart we're looking at. You're going to see three colors on my screen out here. You're going to see blue. Blue refers to daily. Blue skies out there. I have no idea why I chose blue, but we're going to go with blue skies. Now you're going to make me come up with reasons why I chose the other colors, red and green. Actually, just simply because on this black background, they show up so well. But if we take a look at monthly, the reason why I chose red was because that should become major support levels out here. And if we take a look at the NASDAQ composite, we can see that this is 4880.90. And by the way, we can't be exact. These horizontal trading ranges, we use these as guidelines. Really good, darn good. You thought I was going to say something else, didn't you? But no, I did not. Darn good guidelines out here. We can see that that level was tested back here a few trading sessions ago on May the 6th. That's what held that support. Price has now gotten up above the daily horizontal trading range 40.76. If that does not hold that support, expect another test of that 48.88 level out there. That's on the NASDAQ composite. If we go take a look at the S&P 500, the SPX, let's go see what it's doing on its daily chart and where its horizontal trading ranges are. Oh, I didn't tell you the green, by the way. That is the weekly out there. If we take a look at the weekly trading range boundary line for the S&P, we can see that that resistance level, muy grande, that's not even good. Very large, very big. That doesn't make any sense. How about very significant? Grande is not significant, is it? What would be the Spanish word for significant? I know I'll get an email from someone out there. Thank you. I like all the wing men and wing woman out there. Yes, we'll take a look at the UNG, no problem. But we'll that's for S&P and the Tigers Den. Here's what we know about the S&P 500. Great support at the horizontal trading range of its monthly line out here, 2073.16. So that's really a level for you and I to continue to watching out here. We've seen that since April 6th, that level is held. So far, we have not seen price get down into the daily. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 140, S&P down 17, composite off 51, natural gas up 12 cents as we speak right now. Let's go take what we know about natural gas. We're going to take a look at the UNG for S&P, but of course, in order to do that, we have to take a look at the natural gas contract. So that's where we're going to begin our session. And of course, we're going to do that by taking a look at what you and I know, and that is the seasonal pattern inside of natural gas. We know that natural gas seasonally makes a bottom in the April time frame here. This year, it got a little bit later start. We know that natural gas moves higher on average. This is over I'll get that out, over the course of the last 11 years out here. And it moves higher into the early part of mid-June, we'll call it. In fact, the specific date would typically be typically tops out right around June 18th. I would have to call that mid-June. So we can see we've got, and it's not a straight line. You've got moves up and back and so forth. But really, natural gas should have put in a significant bottom out here. So now let's take a look at the natural gas contract, up a nice 12 cents. You've got a strong move out here. Natural gas may be forming the contract here, may be forming an A to B equals C to E to the upside. What does that look like? Well, your A point is down here, the trading day of April 27th. Remember, it was like April 2nd, so it was off by 3 weeks out there. Does that mean that you can extend the top by 3 weeks? You could. But we use that as a guideline. Remember, we use it as a guideline, and we use other patterns to help us identify when you should be long, short, what have you. At this stage here, we've got the B point being taken out with volume, it looks like. That was the contract. That was the date of May 4th. You have a 1-to-1 A to B equals C. That says natural gas ought to get up to $3.05, but more likely $3.15 out here. We've got no bearish reversal signals. Yesterday, you had a little bit of a dark cloudish type cover candle. That has vanished. Those clouds are gone. Therefore, the natural gas contract on a daily basis ought to move up into the 305, 315 area. Now we go take a look at what's going on inside the UNG. Why do we look at the underlying instrument? Because the underlying instrument is really what the UNG is based upon. It's at least based on the current futures contract. I don't know if the UNG goes out to two contracts like the VIX. You take a look at some of those ETFs for the VIX index. People have always said, how can the VIX not be moving? How can the ETF not be moving? That they like what, UVXY or whatever they are. How can that not be moving yet the VIX index is up substantially or it's down? The reason is because the underlying instrument for that ETF is the is the current and the following futures contract out there. It has nothing to do with the cash index, and that's why people get confused all the time. So if you're going to trade those vehicles, my suggestion is make sure that you're looking at the futures contracts as an example for the VIX out here. So in this case here, I believe that the April contract, that's no longer May contract, may not even be active as the May contract. In any event, let's go back to the UNG. I don't want to get too off. That's why we want to make sure that we're looking at those underlying instruments out here and make sure you know what it is you're trading. So in the case of the UNG, that's up 52 cents. It's with 1.9 million shares. We can take a look at a similar A to B equals CD pattern out here. So that A point's going to be down on April 27. Our B point's going to be up here on May the 4th, and the C point's going to be on May the 7th. The B point inside the UNG, just for a double A confirmation, I don't know where that came from, but it did sound pretty good. 13.95 from May the 4th. That had volume of 4.3 million shares, and it was crossed with 8.6 million shares. So that's taken out a B point with volume. Nice going there. That says the 1-to-1 on this is 15.05, more likely 15.50 as it's moved. Does that mean that's the extent of the move out there? Even if that's what takes place, the answer is no. I would be taking a look at the seasonal pattern out here. It says that we ought to see natural gas continue to move higher through the June-ish, July timeframe out here, just simply because of the late start out there. But always use stops. Always take a look at the average true range, and please always look at that underlying instrument if you are trading an ETF that is basically structured to that. So hopefully that helps. S&P in the Tiger's Den. I hope that you're long the UNG and enjoying the ride up. Now let's take a look, talk about enjoying the ride up. How about that Euro Japanese yen? You got the S&P off about 16 points right now in the Euro Japanese yen. It's thumbing its nose. You thought I was going to say something else, but it looks to me like it's really just thumbing its nose at what our markets are doing out here. And it is suggesting that we're going to see another bounce. Now, that doesn't mean on turnaround Tuesday necessarily, and it doesn't mean that it's going to be on Wonderful Wednesday. But it does mean what you and I are likely to see unless this currency pair falls apart, which at this stage it has not fallen apart, hasn't even given us any kind of bearish reversal signal, and it could actually be setting up an A to B equals CD to the upside. Hey, I missed that last break by speaking all the way through, that little 30-second segment. I'm not going to make that same mistake twice. At least I try not to, so I won't do it. But we'll be right back. We'll go take a look at the Euro Japanese yen and anything else you like. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 102. S&P is 13. And just a quick follow-up since I, took you down a path out here. So, as an example, if you're trading the UVXY, that is based on the futures contracts for the June and July contracts. So that's the M contract. I've got that up on my screen here. I'll push it up here right now as we take a look at it. Here are the futures contracts for the VIX index. And it's the June contract is about, I think it's always like a 2/3, 1/3 holding of those future contracts. So here's the June right now. That is up, I've got a 10-minute delay on this, but it's up about 20 cents, about 1%. And the June contract up about 18 cents out here. And so, it is sometimes you'll see these larger movements inside the cash index. That's what you think that you're actually trading, when the reality is that's not what you're trading at all. You're trading the futures contracts out there, and so you should always pay attention to that. And then, in my opinion, those ETF structures are just an absolute ripoff. You should trade those, if you're day trading, and I do mean day trading, in and out during the day on those vehicles, they're okay. But, here's an example. This is what I mean. You take a look at, it's based on, when you take a look at the fees, and everything that's associated. Here, take a look at this chart here. Put this on I can put this on a monthly chart out there. Let's see. Let's see what pops up. Take a look at that. Between all the reverse splits inside this ETF structure out here, take a look at this. Really, today it should be priced at about 97,000 or so. I don't think that this was a shell vehicle. Sometimes you see something like this because it was a shell that they used in order to take a company public. Well, this is not taking a company public. It's just an ETF structure out here. This is this is a futile vehicle other than intraday trading out there. And the reality is, if you want to trade, volatility, then go trade the futures contract. Go trade the actual contract and whatever patterns might be out there versus something like this. That doesn't mean that you can't make money on it. That's not what I'm saying. But what I am really saying, most importantly, is know what it is that you're trading out there, at least the underlying instrument in it. Anyway, so I just look. I'm here to help safeguard your assets as much as I can out there, and sometimes people don't really realize what's really going on and what they're trading. out there. And so this just kind of helps put it into plain English. I think it does. So we were taking a look at the euro Japanese yen before we went to that breakout here. We don't have a confirmed A to B equals CD inside this currency pair. But if we did see a close above the high from May the 7th, that high is 135.99. That would set up a, there has been hardly any retracement. So the question is it really set up an A to B equals CD, or is it just breaking above the 0.382 retracement on its way to 140.73? Either of them suggest a higher move inside of this currency pair. But it's got to take out its highs out here. Again, no bullish or bearish reversal signal there. Now, if we take a look at the euro itself versus the U.S. dollar index out here, we know that this thing ran into the resistance of its longer-term price channel out here. As we take this back, you can see that price channel. Now we'll zoom forward so we can look at it. That was the high here from May the 7th. If the euro is able to close above 1.1391, then we're going to see maybe an A to B equals CD, or we're going to see some type of larger move or retracement. I would have to say the retracement I would be looking at coming off of the highs here from December 16th. That would be one spot that you would look at. That would say the price would move to about 117.65 out there, and that is inside the euro. You're not dealing with that here yet, but price is moving higher. I expect that it will go ahead and run into the top of that descending price channel out there. This is what's helping the U.S. dollar index get stronger. The Great British Pound is doing its job out here because it does have a confirming A to B equals C to the upside. Yesterday, we took a look at the swing point at the $1.55 level, 1.5499 to be exact. We saw a close above that yesterday. What does that mean? That means more likely than not, you're going to see move up to the 160 area. But more likely than even more not, you're going to see a price move up into 163. As this currency pair moves higher, it gets stronger. The U.S. dollar index will get weaker out there. That's what you're seeing as a, in fact, you've got the euro moving higher. That's putting weakness in the U.S. dollar index. The pound moving higher. That's putting weakness inside the U.S. dollar index. And the Japanese yen out here is also getting a bit stronger here this morning. Just a tad stronger. Not a lot, but it is certainly influencing that move lower that we're seeing inside the U.S. dollar index. That just leaves the Canadian dollar. That leaves the Swiss krona and the Swedish franc. Which we don't really take a Swiss franc, which we really don't take a look at because they're like a total of maybe about 3% of the weighting inside of that. Hey, maybe this is Turnaround Tuesday. You got to like the name Turnaround Tuesday out here, but we'll see. So you got the headwind for the market. For the market moving lower, for the bears that is the euro Japanese yen. And now the VIX index, let's take a look at what's. I spoke about the VIX index. We looked at the currency. We looked at the futures contract so that you know what it is that you're trading when you're out there to assist you with what's going on. And that can work to your advantage as well. You can see the VIX isn't doing much, maybe the cash index, but the futures market is trading a bunch higher, and that goes well for your trade out there. But that's just to really help your confusion if you had that. Now what we're seeing here is the VIX index is moving back to the 50-day exponential moving average. Will that level hold as support? If you are a bear, if you're short the market, of course, it really depends on your time frame. I'm still short the market, but from a longer-term positional type trade standpoint. During the day, it's a whole different set of shenanigans out there. But if we take a look at the VIX from a daily standpoint, if you are you want to see that 1420 area, you're right now at 1418. Hold that support. That's 50-day exponential moving average. If we don't, maybe it is Turnaround Tuesday out here. But what the VIX index needs to do, if it's really going to start motor, if the market is going to motor higher, what you got to take a look at is we've got a little rising trend line inside the VIX index, and you got to break below that little red arrow right here. We're not going to worry about what that price point is. We're just simply going to pay attention to it. So those are the headwinds that you're dealing with. If I look at the summation index, sellers still firmly in control of the market out here, although the Dow is going to try to do what it can to keep its head above the zero line of its price oscillator out here. Now, the candles, just to put things in perspective out here, here's the composite. And even though this would show up, let's say right now, as a doji, but it would also be a hammer candle, it's not really a hammer candle. You got a gap down, and so you really got to paint that in out here. But nonetheless, it's pretty good. And we're seeing those daily inside the Nasdaq Composite. We're seeing that daily horizontal trading range so far hold as support. As I say, the fight in the market really between, on the 30-minute chart time frames, is really between the ES Mini, which never gave way in holding its support levels that were formed here this morning out here. So it looks like it wants to move higher. You're already in that third leg. To the upside, no reason for it to not be able to stretch into that fourth leg. Earliest possible time for that would be, it's 11:30. Would be not until the 12 o'clock time frame out there. Excuse me. I didn't mean to. Anyways, you don't need to know what that was. In any event, I haven't looked at any stocks that are moving in the marketplace out here. God, you got to love Turnaround Tuesday. Son of a gun, huh? We'll see what happens at the end of the day. Oh, I know what we want to do. Let's go take a look at gold. Talk about correlations. Gold's up $5. So what the heck is gold doing out here? Nothing. Nada. I actually am now starting to get into the camp here that hold, bang. It's going to be that chitty, bang, bang. It's going to bang itself to the downside out here with regard to gold. Now, I can't guarantee anything out here. What gold has been doing for a long time out here, over a month. It has been, its closes have been within $20. Almost every single day. Not every single day, but almost every single day. That is something that's got its thumb on the price of gold out here. And you could make the case that gold has held, just testing the top of this descending price channel out here. And yeah, I'm going to give you that. It is. This little white diagonal, this white squiggly line on here across my chart should have held the support. Now it's acting as resistance out here. I'm just getting the feeling, the hair on the back of my neck, which there's really no hair there. I shaved that. I don't know. In any event out there, it's just still starting to stand up on the end out here. But if we take a look at the GDX here, if gold's going to break out, I'm going to say let's wait to see if the GDX breaks out. The GDX certainly came back, tested the top of its descending price channel, but it hasn't been able to break above either its market profile high and or certainly get above the swing point from April 29th. That's what it's got to do. If we can see the GDX do, the GDX, the market vectors, gold miners, maybe that gives us a signal that Stevie's wrong. The bang out there, the hold, bang theory is not going to go to the downside, and instead will go to the upside. At this stage, the miners can't break above resistance. Gold just doing this sideways move. I'm thinking that it's going to be a scary move lower that we'd actually want to buy. So maybe that's more hope than anything else, but that's my call at 10:44 on May the, what is today? May the 12th, I think. Yeah, May the 12th out there. Tuesday, Turnaround Tuesday. All right, now let's go take a look at some stocks that are moving out here. Let's look at Newlink. NLNK. That didn't take long for the buyers, sellers to jump back in here. Newlink is down $11 off 22%. What is it doing out here? Newlink is down with some major volume, 2.1 million shares for this equity. What is it doing? It broke a swing point. It broke with volume. Looks like an A to B equals CD to the downside. That says a price projection inside of this equity ought to take it down to approximately a price level of it hit the 1-to-1. You make the 1-to-1, you cross the B point, you do it with volume, you gap down into it, says you're going to likely go lower, more than likely, I should say. The 1-to-1.272 takes you to 34.62. I would say more likely than not, this comes back into the set of swing points from back in February 2015, more likely in the 32-ish area, 32 to 35 for Newlink. NLNK is the ticker symbol. Price line, that's off $8 as we speak right now. Price line just inside a trading range. That trading range from $11.29 to $12.64 out there. Not doing anything more than that. If we take a look at Barrett Business Services, BBSI, down 18%. No idea, but that is an ugly looking candle today. This thing has been selling off. I don't see what the news is behind it. Nonetheless, wide-ranging bar, looks like some volume. This does not have, it's not a big, really liquid type of an instrument, 90, 100,000 shares. It's done 258,000 shares today. Probably coming back to a breakout in the $31 area. It's trading at $40. I do not suggest you go and short this instrument. Not a lot of liquidity out there. Also to the downside, you've got Rackspace Holding. RAX is the ticker symbol, down 14%, off $7 and change. This thing is gapping right down into a hammer candle with volume. That was the hammer candle low out here from February 2nd. That low is 43.56. 43.56 has not been tested, but that swing point had 1.5 million. You've done 7.7 million. If that swing point fails, if that hammer candle fails, then price ought to come back to its most recent breakout, somewhere between 37.42 and 39.52. Rackspace Holding. Getting just literally crushed today. To the upside, let's go take a look at something moving to the upside. Let's take a look at Intercept Pharmaceuticals, ICPT, 237,000 shares. The upside up 3.5%. What is this thing doing here? Just simply consolidating around the highs out here. Looks like Intercept Pharmaceuticals is going to go test its all-time. Is it all-time high? Nah, not its all-time high, but its most recent high, that's for sure, and that's from the trading day of March the 20th. There was only 1.3 million shares. You're into it right now with 237 in your first hour of trading. Intercept Pharmaceuticals. Let's take a look at Tesla, TSLA, up $7, up 2.8%. What is Tesla doing? Tesla's now made the 1 to 1.272 A to B equals CD. See what happens when you break a trend line out there? That is what Tesla did. It did it on the trading day of April the 8th out here. Where is it headed to? Well, it forms a Gartley sell pattern at the price point of 250.77. Right around that level, 250.77 to 254.63. That could be a sell point, but you won't know till you get some kind of reversal signal out here. We do not have that as we speak today. That's ticker symbol TSLA. Humana, HUM. It's humming along this morning. It's up 3%, up $5 and change. What has Humana done? Humana has pulled back to a sign of strength out here. That was from February 23rd. Of course, that sign of strength was met with a sign of weakness, 4.5 million shares going against 3.2 million shares. Nonetheless, this area here has held. It's got some resistance, little supply line at the top of that April 29th level, 177.44. If we take a look at Edwards Life Sciences, EW is the ticker symbol. Edwards Life Sciences. This thing here, what did this do? This has a nice level, nice sign of strength out here. It's got two of them. It's got one from October 24th. It's got a number from March the 16th. Those are big, wide-ranging bars. Those are both with accelerating volume. Price just simply inside Edward Life Sciences came back to a swing point from February 3rd. It is now bouncing off of that area. Edward Life Sciences probably runs in, well, so if it can clear 133.43, probably tries to make its way to the 138 to 141 type level. We've got the Dow off 25, S&P down 5, Composite off 21, the Russell 2000 down 7. This is Steve Rhodes with TFNN. We will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 36, S&P is down 7, Composite's off 22 points. So you'd probably like to know what's going on in the market. Where is the market headed to? The market is going to continue this chop. It's going to give something for the bulls, something for the bears. It's going to continue this pattern here for several more days. We've been doing it for quite a while. We're going to continue to do it out here. And that's certainly the message. The message of the market, you can see it going really in both directions out here. You've got the, as an example, we got that Euro-Japanese yen currency pair. No, that certainly is not breaking down. That's moving higher. Markets tend to get its liquidity from that currency pair. It's the carry trade. You've got the VIX index right now. It's trading right at or below the 50-day exponential moving average, 1409. It's 1419, 1420 is where the 50-day exponential moving average is. When the VIX trades below that, it tells you there's a liquidity. Now, it's got a competing pattern in place. It's got a little rising bottom pattern in place. So that's always one that says, you know, caution. I throw caution to the wind out here, but there's some liquidity out there. With regard to the, take a look at the TAS market profiles out here. From left to right, you got 30-minute, you're above resistance. On the 60-minute, you're above resistance. On the 120-minute chart, you are not above resistance, but on the daily, you have held support at 43.70 out there. So if I just switch over and take a look at the 120-minute time frame chart, I think this is the one where we get the most amount of information from. We can see the descending channel, the price channel out here. This is active. It's been working really well. Expected to continue to work really well. What that says is that if we take a look at this morning's action thus far, from the low of May 7th, to the high out here yesterday at about between 8 and 10 a.m. out here at the 44.64 level, we've seen a 0.618 retracement. in the market. Nice big bullish engulfing candle that has formed right here. Could it be an A to B equals CD to the upside? Hey, anything is possible. If that were going to happen, you're going to see this trend line, this channel line get taken out. That's if, in fact, price can get up there. Expect the level of about 44.36 to hold as resistance inside the NQ on any continued turnaround Tuesday move to the upside out there. If, in fact, the channel line gets taken out, then you're looking at 44.57, but which is a revisit of the highs out here, but you may be looking at something more than that because that would actually be a break of that descending price channel. So expect a choppy market. Expect it to continue today. Expect it to continue tomorrow and the next day and the next day and maybe even the day after that. And expect this to frustrate the bulls, frustrate the bears out there. But if I set that as your anticipation, you won't be frustrated, right? You'll be saying, and sometimes there's times to just sit on the sidelines if you're not in a trade out there. And if you're in a trade, it's always time to make sure that you've got the proper stop in place, whatever that might be for you, just as long as it's not a no-stop trade out there, because those are dangerous. So Dow's off 53. Last week I began my workshop, The Psychology of Trading, which is way more than the psychology of trading. It's about really being able to turn the invisible and make it visible for you by being able to show those that attend the workshop what it is, the elements of what it is that stops you from taking action, stops you from moving forward. It's basically me providing you with the tools so that you can have your Roger Bannister moment. Roger Bannister is the one that broke the 4-minute mile. Once people saw Roger, it took thousands of years. Once people saw Roger Bannister break the mile, it held up for like 17 days, right? Once somebody saw that it could be done, everybody believed that it could be done. I can teach you how to break through your hurdles. The easiest way is come on over to the homepage at TFNN.com. Even though you missed the first workshop, that's no problem. You can watch the archive. You can watch it today, tonight, tomorrow, and then you can attend the next workshop, which is this Thursday. I want to help you break through any barrier that's in your life, whether it's your health, whether it's your wealth, whether it's a relationship. I can assist you all the way. So have a great Tuesday. Stay tuned. Our man Basil Chapman is up next, and I look forward to seeing you soon. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.